I think Hyperliquid is the first in what I expect will be a series of new Gen 2 tokens that have good tokenomics where much of the value is captured by the token itself.
As always, note that none of the information discussed constitutes investment advice or any offer, recommendation, or solicitation by Blockworks, Galaxy, Bitwise, or Anchorage, or any of its affiliates to buy or sell any securities.
Hey everyone, welcome back to Inflection Point. I'm your host, Mark Thomas Arjun, and I'm joined as always by Mark Antonio, Matt Hogan, and David Lawant. Hey guys, how are you doing?
Doing
Hey, Tom.
great.
Hey,
Great.
guys. Hey, Mark. Hey,
How are
Matt. Hey,
things?
David. Hey, guys.
Yeah. Well, I hope everybody's feeling refreshed. We had a little break last week, and now we're back on it. Our longest hiatus yet. And in that time, I don't think the market has really liked it too much. I think BTC is hit around 76, 77, and ETF inflows have kind of weakened. How are you guys feeling? Maybe Matt, I'll kick it off to you.
We're in the May muddle. This is like a depressing sideways down market. I think the world is worried about a broad risk off trend. And as a result, they're not sticking their necks out the risk curve. Crypto is caught waiting for clarity. So we're sort of in the old sell in May and go away kind of vibe. I think we more or less muddle along until we have a resolution on either Iran or inflation or some of the risk off concerns, and or clarity actually makes it through. I don't see a lot of short term catalysts for the at least the majors ahead of that. And I think there's also sort of a rising negative sentiment around ETH that is weighing on the market. There's a corner of the market that's doing well, right? Hyperliquid doing well, near doing well, maybe Zcash doing well. So there are a few areas of bright spots, but broadly speaking, I think it's a sort of May malaise that has affected the crypto markets.
I think, you said that this is this kind of bad period, let's just say. I'm looking at Bitcoin volatility, and to me, to many people, I feel like this is max pain. Just seeing Bitcoin move from between 75 to 81 over and over again is like horror. There's no actual clear direction. And then, like you said, with the larger, let's call it macro and geopolitical backdrop, um, I also feel like it's hard to compete against even 5% yields. Like that's doesn't do well for risk assets, which I still classify Bitcoin as now. So yeah, overall, very tough time. But I mean, does anybody have any thoughts on Bitcoin again before? Because Matt, you did mention Hyperliquid. You did mention some of these pockets.
Uh, I mean, look, I think the outlook for Bitcoin over the next couple of years is extraordinarily bright. So it depends on what kind of investor you are. If you're a long term investor looking at this market, I think there's reasons to be extraordinarily optimistic. But that's a bet on where it will be in 2 years, not a bet on where it will be in 2 weeks or 2 months, which I think is a much tougher bet to make at this point. Right? It just looks malaisey over the next couple of months. But I think the second half of the year is still shaping up well. If we get clarity and some improvement in the macro conditions, I think we could be off to the races as we get into the traditional sort of calendar part of Bitcoin's acceleration.
Yeah, I agree with that. I agree with everything Matt said. And to your point, Mark, we definitely should cover Hyperliquid and maybe in some future episodes, some of these other corners of crypto that we're seeing a lot of interest, right? There's the whole privacy narrative around Zcash. There's also the AI crypto kind of convergence with Near, as Matt mentioned, Venice. There's a lot of exciting stuff happening outside of the majors, which is kind of unique. Usually the majors, they're kind of these, let's say, these non-major assets, they're usually kind of high beta to the majors. It's not always that you see Bitcoin and ETH kind of very flat, and then these other corners doing exceptionally well. We should definitely cover those. Uh, but I think on Bitcoin specifically, the other thing I would highlight is that there is this big AI theme that is actually sucking a lot of air out of the room. We could potentially have a few, or maybe let's say 2 to 3 giant, absolutely humongous IPOs over the next 6 to 12 months. SpaceX being the first of them. The S1 was released just a few days ago. A lot of these things are going to be very large, and they draw capital from other sources, and I think it's fine. Crypto is not the theme of the moment; it's definitely AI, and that could continue for a few weeks, a few months. But to Matt's point, I think Bitcoin's investment thesis is still intact, or I would say even better than ever, because the version of the world that Bitcoin was supposed to protect is here. It's becoming very tangible every day. Governments continue to spend. You continue to see all sorts of tensions that Bitcoin is supposed to be a hedge against. So I'm very bullish on Bitcoin. The other thing I would say is just to underscore maybe a little bit this malaise that we've been talking about, and I might have a few charts here. Let me see if I can share them. Yeah, the thing I wanted to highlight is actually two. Um, One is how illiquid the Bitcoin market is right now. If you look at how much Bitcoin is trading across, let's say, on the spot market across the main exchanges, we are basically at a $5 billion level. And for those who are here, you probably remember when in a typical day, Bitcoin would trade 15, $20 billion. In an overall heated market, when we were like pressing against key price levels, Bitcoin would trade 20 to $25 billion. We're now at five. This is basically the lowest number on a 7-day moving average since like end of 2023. So I think it shows a little bit how much apathy there is in the market. And the other thing I want to highlight, and I'll put a chart on this later, is how much you are seeing this battle whenever Bitcoin crosses the 80K price level. Whenever Bitcoin goes above 80K, the amount of sell pressure that we see in the market is absolutely insane. And by that regard, I mean that the Bitcoin spot skew, the skew of the Bitcoin spot order book gets tilted to the sell side to about 10%, which is a lot for Bitcoin. It actually doesn't happen very often. But whenever it goes below the 80K level, the sell pressure kind of disappears. And then Bitcoin kind of gets poised to get back to the 80K level. We're now at a very interesting juncture because we're now touching the 76K level, which we haven't seen in a while. I think it speaks a little bit to this risk off environment, especially in the areas of the market that we are in. So we'll see how that shapes. But so far, the market setup has been above 80K, a very strong amount of sell pressure. Under 80K, the sell pressure has been kind of waning very quickly. So what this tells me is that we'll probably continue to battle around the 80K level for a good while. But let's see. It seems that things are changing a little bit. Maybe we're getting to a new market regime. So we'll see how things go from here.
Yeah. I've been really focused on Hyperliquid over the last week. I mean, Hype hit its all-time high, $64, $64.32, I believe, which was like 2 days ago. The token's up 156% on the year. Uh, the bull case here, from my perspective, is that maybe this is going to be the runner that catalyzes altcoins. You get a little bit more institutional and retail interest in altcoins. That's, of course, militated against the fact that, as you guys said, we have SpaceX and some of these other hot IPOs that are hitting the market that are sucking some of the interest and capital out. But I think Hyperliquid, which incidentally passed Solana in terms of fully diluted market cap. So that's a pretty significant milestone. Um, and it's for good reason. Hyperliquid's processing roughly 170 billion in monthly perpetual futures volume, controls about 70% of the on-chain market share. It just printed a record 2.95 billion in open interest on May 25th. So the the relevant metrics that we all like to look at for success in an ecosystem and success in a business, Hyperliquid is hitting. And I think it's in part because Hyperliquid isn't really just a perp dex anymore. Um, that framing is a little like 2 cycles out of date. What it actually is now is like a unified derivatives venue. And the unified derivatives venue has 4 interlocking revenue engines. Of course, it has the perpetuals, which generates roughly 56 million monthly trading fees. But it's got the HIP3 builder deployed markets, where anyone staking 500K hype, which is roughly today like 25 million bucks, can deploy their own perp. And Trade XYZ is really taking advantage of that and has done about 12 billion in volume across tokenized stocks, commodities, forex, and pre-IPO contracts to date. And then you have HIP4, these outcome contracts, which was launched in the beginning of the month. And it's the only crypto native venue where you can trade prediction contracts cross margin against perps. Uh, I think the first CPI macro market just listed there. And then, of course, you've got something we haven't talked about on the show, which is the AQAV2 reserve yield capture segment, which is going to route roughly 90% of USDC reserve yield on the platform, which is going to be about 5 billion afloat back to the protocol. So that's going to be roughly like estimated 130, 160 million annually. So all 4 revenue streams will flow back into the same buyback engine. And as we talked about previously, the buyback model, for all its imperfections, makes valuation much cleaner. If roughly 95% of Hyperliquid protocol revenue is routing to open market hype purchases. And I believe since launch, there's been roughly like 1.15 billion of buybacks. And that's like a reflexive flywheel that, you know, uh, in which revenue funds buybacks, buybacks support price, price drives volume, and volume, of course, generates more revenue. The real thesis here, in my mind, and why Hyperliquid is so successful is actually there's 2 pieces to this. The first is that um, it's obviously the fastest growing perp venue, and it wins because no competitor has the same product surface area. Polymarket and Kalshi don't do derivatives. DYDX doesn't have outcome contracts. Aster and EdgeX don't have HIP3. So Hyperliquid's the only place a trader can post one USDC collateral pool. And it can post one USDC, it can post USDC in a collateral pool and back a long BTC perp and short an ETH perp and long a pre-IPO Anthropic contract and have a CPI above 3.7% outcome bet, all under one of the same outcome engine. So there are real threats, of course, to Hyperliquid. I don't want to say this is an impregnable moat, but it's quite interesting.
Yeah, I agree. It's quite interesting. I think it's the first super app. Paul Atkins called for super apps where you can trade all assets in one location. Usually, when regulators call for something, it appears in the world. I think Hyperliquid is the first. There it is. Uh, it's the first, not a crypto app, it's a super app, which is important because it is targeting the $600 trillion global asset market. Nearly half of its volume is now on non crypto assets. And I think the world isn't recognizing that. I'll say one more thing. I also think it's the first Gen 2 crypto token where it's launched sort of in the post Gensler era, more or less the token itself in the post Gensler era, in a world where founders aren't afraid of going to jail if their token accrues value. And so it's launched with good tokenomics. And as a result, its tremendous growth is being rewarded by the market. I mean, an incredible fact about that buyback thing is though it hit a new all-time high price, it did not hit a new all-time high in market capitalization because it's bought back so many tokens, which is an absolutely mind-bending fact for people to consider. Um, yeah, it's really, really remarkable. I think Hyperliquid is the first in what I expect will be a series of new Gen 2 tokens that have good tokenomics where much of the value is captured by the token itself. So I think this thing runs for a while. I think it can run even as AI sucks up oxygen in the room because it is such a good story, right? And it is targeting such a large market, as we just talked about. It's targeting a entire financial ecosystem market. You can be excited about AI and still want exposure to hype. And I think most investors don't know about it yet. I'll share one fact. I was at a single family office conference in London. I think it was last week. I guess sometimes lose track of my travel. Um, and 0 people in the room knew what Hyperliquid was. But after my talk, they all knew what Hyperliquid was. And that is going to happen 1,000 times over the next half of the year. And I think they'll be pretty excited about it.
Absolutely love that. Um, Before I share my thoughts on Hyperliquid, I have to say that I think we had in one of our previous episodes, we were sharing what we thought was interesting. And I mentioned Jeffs, who's the Hyperliquid founder, report on Colossus. And someone mocked me. I think it was Mark. That was maybe a month or a month and a half ago. I will reiterate that that report should be read. It's a very exceptional project with a very exceptional founder. The thing that has been catching my attention is why this is happening now? Because a lot of these things that Michael and Matt mentioned, I mean, folks like us who have been paying attention to the space, we've known this for a while. Like we see at our trading desks and what I hear from all other trading desks, Hyperliquid is a kind of consensus holding among every single professional crypto investor. And I think here we have to give kudos to Mac because a big chunk and a big reason why I believe things are taking off recently is because we had 2 ETF launches, right? 2 spot hype ETF launches, one by Bitwise, the other 21 shares, I think. Those have been exceptionally successful. Would love to hear from Matt what the outcome was, but I think these 2 ETFs are now nearing $100 million in total AUM, which is massive. I mean, especially we're now like near Memorial Weekend, so it's not a super busy time in the market. So the ETFs have been, I think, probably the main vehicle that has been propagating this story to these outside circles.
Yeah, it's been absolutely amazing, the reception. Yeah, I appreciate you showing this, trying to show our alignment with the hype community. Um, yeah, these have been the most successful single asset ETP launches, really since, Bitcoin, certainly on a scale adjusted basis. And I think late last week, they were among the most traded crypto ETPs, which is astonishing when you think about the relative scale of Hyperliquid's market cap to something like Bitcoin or ETH. And BHype, our ETF, was trading more than many Bitcoin ETFs. Today, it looks like it's going to set a new record, just absolutely huge volume. So, look, I think this story will continue. It's also important to note, I said this again, but once there's an ETF, people like Bitwise can go out there and talk to professional investors about this asset. Before there's an ETF, there's really no reason to. And actually, when you file, you can't. So, now you have, Bitwise's 25-person sales team giving this message to a lot of investors. And I think it's just going to, I think it's going to grow from here. I think this is going to be a core crypto holding for most investors. As David said, it already is for the crypto cognoscenti. I think for the TradFi investors who appreciate crypto, you're going to see a rotation into into these ETFs over the next couple of weeks.
I don't know if Matt's hype ETF is driving hype, or if Matt just timed it absolutely perfectly, like the most perfect timing to launch the ETF.
Always better to be lucky than good. You know, I think look, ETFs are helpful. They're another way for money to flow into an asset, but it is also the right time. Um, I think an interesting thing here that we're experiencing is people realizing that Hyperliquid is different than the first generation of tokens. I do think there's an anchoring bias against sort of altcoins right now. And it's taking a while, and you sort of see these successive wave of investors saying, "Oh, maybe this one is different," because of the fact that, 95, 99% of revenue flows back into the token, or there's not the same level of overhang, or this, that, or the other. So I do think there's this education process, which is opening people's eyes, which is pretty exciting.
Yeah, I love it. The one indicator I've been following, and I think this is an interesting one, especially when we have an asset breaking out like Hyperliquid is, or whenever there's a big kind of movement. I like to look at CVD by exchange. CVD is like cumulative volume delta. So it basically tries to measure or tries to see a proxy of how much buy pressure or sell pressure you are seeing by exchange. And for Hype, if you look at it over the past 7 days or so, and we'll put this chart on the screen later on, but the main exchanges that are leading by pressure on Hive are number one, Coinbase, and number two, Bitstamp, which to me tells that we are seeing this, if not from the ETF complex, is definitely coming from the more, let's say, mainstream US retail or US institutional base. It's very rare to have Coinbase leading buy pressure in a world where 85% of the volume comes from Binance, Bybit, and OKX. So it's a pretty different pattern in terms of where we're seeing this buy pressure coming from. The other thing I want to highlight, and this was interesting, at least for me, I wasn't paying attention to this until a week ago, is that spot liquidity for Hype tokens on centralized venues is actually smaller than you might think. It's about $100 million. That compare if you take an asset like Solana, for example, which is not the most liquid one, we're not talking about BTC or ETH. Solana is around 600 to 700 million. So Hype at about 100 is actually quite illiquid for those standards. And that's mostly because a lot of this activity is happening on DEXs or on derivatives markets. And it also shows how much pressure these ETFs or just relatively mild interest from retail can put on price action.
There's still a lot of buy pressure left from the ETFs. I'm showing this chart here versus Bitcoin, ETH, and Sol, the percentage of hypes or all of these crypto assets, AUM as a percentage of their total market cap. And for the viewers at home, for the quote unquote old majors, we're looking at anywhere between 5 and 8%. And for hype, we're still looking at around like the 1% mark. And so I imagine for an asset that this illiquid that's buying back its tokens and only has like $100 million in daily volume, like you said, David, I imagine this might have a more outsized impact on price than it would for say Bitcoin.
Yeah, I mean, it's a relatively small asset, but it's relatively or not, but it's quite attractive to traditional ETF buyers. I mean, think about me walking into a financial advisor's office and talking to them about the growth of stablecoins and tokenization, and then pointing to ETH as one way to play it, and answering how ETH accrues value and how you value ETH. That's actually a relatively complex indirect conversation. You can have it, but it's relatively in. And then imagine the same thing in hype. Like, this is what it does. Here are the stories on Bloomberg about it. Here's this Colossus piece, as David mentioned. 95% of the revenue plus 99 goes back to buying back the token. You can value it on a buyback versus market cap at this, and it's growing at this pace. It's actually like a relatively easy conversation for a traditional investor to understand and intuit. Certainly much easier than either the Bitcoin conversation or the Ethereum Solana conversation. This is much more direct and sort of TradFi ready if you think about it from a valuation perspective.
100%. And I also think this probably points to the future of tokens and how the most successful tokens will be in the space. The other thing I would highlight, Matt, I don't know if you think this makes sense, and I don't know if this plays a role, but I would argue that hype is today one of the easiest ways for you to have exposure to prediction markets if you have only access to liquid investments, right? Because if you want to invest in things like Polymarket or Kalshi, you're either in the venture capital space and you're in the select funds that were able to invest on those things, But Hyperliquid with HIP4, as Michael mentioned, can become a major player in the predictions market space. This hasn't happened yet because it's a very recent launch, but it has all the potential to do so. So that's another reason why Hype can be attractive. I would argue that prediction markets is also one of these hot themes, right? Beyond AI and a few other interesting things and stable coins and maybe perp dexes, but there's also the prediction markets angle. And I think Hype is one way for you to have relatively decent exposure to that if HIP4 grows as much as I think and probably we all think it will.
Yeah.
That's a really good point.
I think Robinhood also has their predictions market product, which kind of brings me into my larger point. We've been praising Hype a lot. There's competition, maybe not only blockchain world, but there's competition from TradFi. Like for instance, Matt mentioned this being a super app. Look at what Robinhood is doing with options and stocks and crypto and tokenization, etc., savings, etc., right? And so what do we think about the distribution of, let's just say, a traditional financial exchange? And actually, let me pull this up too. This is a tweet I've pulled up from the Hyperliquid Policy Institute talking about, certain traditional financial exchanges raising concerns about Hyperliquid's, derivatives. I think this is specifically in reference to their oil markets because of how much of a popular product that has become, specifically on weekends when traditional markets are closed. But this still leads into my greater point of there is competition. This competition does have large distribution. I mean, if we're talking about ICE, which is the owner of NYSE, they've actually partnered with OKX to do derivatives of oil on OKX's exchange. I know Binance offers oil derivatives, and I think sometimes the volumes on Binance might sometimes exceed that of even Hyperliquids. So, do we think that Hyperliquid is growing enough that its distribution is going to match some of the maybe the competitors that I've mentioned, or are we thinking that there there is a large market for offshore, like when I say offshore, I mean off US shore, offshore, less KYC exchanges. So what are the risks here if we've thought about it?
So I think the most credible competitive threat to Hyperliquid, and now it's early to be clear, so this could change, but is this ICE and OKX partnership. ICE took a $200 million stake in OKX in March at a $25 billion valuation. And this month, I think it was last week, they announced perpetual oil futures using ICE's Brent and WTI benchmarks. That's Hyperliquid's playbook, but it's now with Wall Street data and regulatory cover, quasi-regulatory cover. The catch is, I think this is actually still an offshore product for now. And I think the real fight will come when this ICE OKX partnership gets US perp approval, especially before Hyperliquid can scale fully into institutional buyers. So I think that is something to look at.
Yeah, I think it's a positive. When you're trying to disrupt a market, having highly credible competitors is hugely useful. Like, do you think Polymarket is stronger with Kalshi in the market or weaker? I think it's exponentially stronger. I'm sure they fight tooth and nail, and I'm sure they dislike each other and they try to win. But the probability that prediction markets get regulated out of existence is much lower because you have two credible firms, and now you have three, four, five, six credible firms. Look, I don't like having BlackRock in the market in a sense for Bitcoin ETFs, but my AUM has 15x since they entered the market. I'll take that, even as I try to, fist fight with Robbie Mitchnick for assets. It's. I think in these markets you want those credible competitors. So yes, I agree with what Mike is saying. I think that's a credible competitor, but I think it's probably net good for the outlook of Hyperliquid. It's a relatively small asset. What is it? $16 billion. CME is $110 billion, less dynamic. You know, an interesting exchange, great business, but like you can grow significantly. And I think the existence of highly credible competitors is actually on the margin positive for the space.
Yeah, I think it would be concerning if a company attained the success that Hyperliquid has and not every single exchange were paying attention to perps engaging with crypto rails. What would be concerning would be if all these other players were not engaging. Then I think we would have to be posing the question of why is not everybody looking at this opportunity and going for it. I think it's a totally fair part of the market. We're seeing that in other corners of the crypto market, right? There's a Coinbase versus Robinhood, also Titanic fight also going on there. And I think we're going to see more and more of those. And that's just the best thing that we could hope for. It's the best for the consumer. And I think that's how the industry gets stronger.
Yeah, I think that's right. You usually end up in these things with like a 60-30-10 split between the leading firms. So what Hype is really focused on is it the 60, the 30, or the 10? Or does it get disrupted from the bottom? But it's such a good product and such a strong community that I think it has a real shot, at being the 60. That doesn't guarantee it's going to be the 60. It could be the 30. It could be the 10. But I think that's sort of where the fight will be had. It's not 100 or 0. It's more like which tier of the oligopoly of dominant markets do you get to sit at?
Yeah, I mean, Hyperliquid's edge is not that it came up with this perp dex model first. And I would argue it's not even that it has a regulatory moat edge or regulatory arb edge. I think Hyperliquid's edge is that it ships faster than everything else. I mean, the scale at which Hyperliquid is scaled is tremendous. That team has been shipping nonstop. So if OKX and ICE can ship as fast as Hyperliquid, you'll have a dogfight there. I agree, Matt. Actually, you make a very good point that it benefits Hyperliquid, even though it's potentially could take some market share away. But as long as Hyperliquid stays a lean, mean team and is able to ship quickly while also balancing their HIP3 competitors in a very, very interesting way, which is that they're not purely centralized. Not all the innovation is coming from the Hyperliquid Labs team. It's also coming from Hyperunit, Token XYZ. It's coming from third parties that are contributing to HIP3. I think you're gonna continue to see Hyperliquid dominate.
I really do like, Matt, what you said about it's actually beneficial. I like the ETF example. I was in the ETF space in Europe at CoinShares, and then when the US came out with it, out the business grew massively. So it is kind of counterintuitive, but I do like it. And I'm a hype fan, just like everybody here on the pod, and I'm going to continue to push back a little bit more. Michael, you said the advantage, wasn't the scale, wasn't the regulatory, it was about the growth. But let's look at the regulatory. Like in crypto, the mantra we've been holding on to is the institutions are coming. And we're seeing it happen. We're seeing the regulatory progress, the environment. But when we mean that, we kind of mean the flows are coming, right? We want, and are these large institutions who want to get exposure to perps, whether it be, you know, digital commodities or traditional financial assets like stocks, are they going to go with Hyperliquid? There's no KYC, not necessarily knowing who the counterparties are, or maybe something like a Coinbase, which already has Coinbase perps licensed in the US or their own internal product. Like, do you not see that as a blocker?
I think they're gonna go to where retail is, and where volume is. Now, to be clear, the biggest threat to Hyperliquid, in my mind, is the fact that it is operating in a regulatory gray area, and its tokenomics, I think, are somewhat challenging over the next 12 to 18 months. But I mean, on the one hand, Matt is correct to say that ICE and OKX adding additional competition could help Hyperliquid. On the other hand, it depends on how they use their US institutional relationships and power. So if they use it to sort of stifle Hyperliquid and undermine it from a regulatory perspective, that could be problematic. I mean, right? Like to look at the SEC's recent pullback of the innovation exemption that we saw last week, that was militated largely by CBOE, NYSE, and NASDAQ. And I think, we should talk about that. But, there's many ways that competitors can operate. One, they can just ship better products and attract more distribution. The other is that they can go to regulators and say, and scare institutions away from joining and participating in unregulated products.
Yeah, I agree. I mean that is that the fudding risk and the real fact that it is, as you said, in a regulatory gray zone, I think was your term. Uh, I think that's a meaningful risk, right? And you see this. Look, every mainstream institution faced with a new competitor is going to try to engage in regulatory capture to protect themselves and slow them down so that they can catch up. Right? That's the oldest story in crypto land. Jamie Dimon and stablecoins is probably example 1A. Um, but yeah, no, I think that's the risk. Like, there are plenty of risks with Hyperliquid. There's no guarantee. It's not going to grow 1,000% a year forever and make everyone who ever buys it, infinitely wealthy. They're huge risks. But it is well positioned and not incidentally, which I think is another important point. Sort of the Hyperliquid breakthrough involved multiple sort of technological factors coming together at the same time. This is not something you could have done 3 years ago, right? You needed the sort of throughput levels. You needed a number of things to come together into at one time in order to have the sort of engine that Hyperliquid has. So yeah, there are risks, but it does have a unique lane, I think, to grow in.
Yeah, I agree. There's a lot of risks, but it's also one of the most interesting times in the market because it does seem like regulators are as open to financial innovation as they have been in a long while. So we'll see how the battle will shape out. I think it's going to be a very interesting one.
I actually think the SEC's pullback on the innovation exemption primarily benefits Hype because it pushes more tokenization of equities offshore. I actually think Hype might have suffered a little bit if that became if the innovation exemption had been pushed forward.
It's an interesting take. That makes sense.
Maybe Michael, maybe you can expand on what happened and why you think it's positive for maybe this DeFi or Hyperliquid in specific.
Sure, I mean SEC Chair Paul Atkins, he had been pushing this draft innovation exemption, and they prepared to release it, I believe, last week. And the framework would have created a 12 to 36 month sandbox, letting U.S. firms issue and trade tokenized U.S. stocks without full broker dealer registration, which I have said on this pod consistently has been one of the big barriers to U.S. equities trading on chain. It's not necessarily that we don't have enough tokens to trade. It's that we don't have enough market makers that have broker dealer registration that are permitted to actually create markets in those assets. Last Friday, however, the SEC pulled the draft indefinitely. The important detail that I just mentioned was that it wasn't, it didn't necessarily come from crypto opponents, right? It came from, it came from opponents that are engaging actively with crypto, but so are not necessarily like the ones you think of first and foremost as being against crypto, but it was NYSE, NASDAQ, CBOE. And they won this backroom fight. They argued that the framework would fragment liquidity, undermine the regulated equity market structure, and ultimately create surveillance gaps. And Atkins blinked. Commissioner Peirce, incidentally, defended the proposal, albeit narrowly, saying it would only apply to authentic tokenized securities, not synthetics. That's been her position for a while now. I think that missed the mark though, because that wasn't really what the concern was from CBOE. What they were concerned with was not synthetics. They objected to the venue competition for their flagship products. So it doesn't matter what assets are traded on there. What was the venue that would be the venues that would be expanded by allowing this? So I think just a where I think this goes from here is any redrafted framework, I think now looks like it will almost certainly require some sort of ATS registration, NMS routing. I hope this is not the case, but ATS registration and NMS routing, and certain reporting standards for tokenized equities, which I think will really slow down the development in that space within the U.S. jurisdiction. and push the velocity of tokenized equities offshore. Continue to push it offshore.
If you think it requires, let's just stick with the ETS one. If you think it requires that, why would it push it offshore? Are we only thinking retail here? But wouldn't it? We talked about the bullish acquisition of Equinity. We talked about the securitized partnership. Like this stuff is already happening right now, albeit gradually. So wouldn't this benefit maybe the early movers in this space?
Um, I'm not sure what you mean. Let me make a point on this. Whether you're bullish or securitized, and you're going to be issuing real tokenized equities, not synthetics. This decision to pull this back still affects you because now you are basically injecting regulatory uncertainty as to whether market makers can trade these tokenized equities on chain.
Yeah, not the decision to pull it back. I more meant like if the updated rules would require that stuff.
If they would, if they would require ATS and NMS
Requ-
registration.
yes, correct.
So when you look at what is required for ATS registration and NMS, it's very burdensome. It's very onerous. So we have this gap in the market right now. And I'd like to know what Matt and David think about this, but I see this every day. There's a real gap in the market right now. On one hand, uh you have crypto market makers who are experienced with market making crypto. And almost all of them don't have the requisite licensure to trade equities. On the other hand, you have equities market makers that have all the relevant licensure to trade equities, but don't have the infrastructure and experience to trade on chain. And you have this gap where this innovation exemption was going to fill the gap for at least a period of time, allowing crypto native market makers to be able to trade these tokenized equities. When they pulled this back, they essentially are as of right now requiring these crypto native market makers to either register as broker dealers, or exchanges or protocols register as ATSs, which I think is going to be very difficult because it takes a while. And putting aside the length of time it takes to get licensed, it requires a large compliance team that a lot of these crypto market makers, especially smaller ones, just cannot afford, especially right now.
Yeah, I think the tension here is, first of all, this is something you want to get right? So once you get the strain going, it's relatively hard for you to come back and start to rewiring things. So I guess the positive side of the SEC withdrawal is that they're probably taking more time to get it right, and I think long term that's positive. I think the negative side, and I don't know to what extent this is actually the case. I'm not sure if I understood your case here, Michael, but if we get completely away with any sort of exemption and we go straight to a licensed regime, I think that would be onerous, and this could push the transition and put the U.S. Behind. I wonder if there's some sort of middle ground here, though, something that still allows a sandbox environment to develop, but at the same time, something that maybe is a little bit more thought out in the sense of, I don't know what the main sticking points here are right now and what they're going to be in the future. But I wonder if there's a middle ground here that we can achieve. I don't know. I think here we need to see the next few steps. I guess everybody here in this room would agree that there are a few unsolved questions with regard to tokenized equities, right? I think we raised more the liquidity fragmentation issues, but there's a lot of questions that are still unanswered and things that we maybe need to think a little bit more about how this market structure should look like. That's one point. I think the other thing is that everybody here has been surprised at how fast the SEC and all the U.S. regulatory agencies have been moving. Maybe this is not a full retrench, but maybe just a partial retrench to something that is more maybe sustainable in the long run. I don't know. I'm still trying to look at, or perhaps the optimist on me is still looking at the half full glass side of things here. But I think there's still a way for things to keep moving in a way that maybe is more palatable to the incumbents, but that still will still allow some sort of exemptions and the US market to move fast. How that will look like, I don't know. I think it's a big question that will develop over the next months or quarters. But I think let's see what the next steps are going to be. But I was surprised to see that. It's the first time that the SEC has walked back on anything crypto related within this administration, probably.
Yep.
I don't know. We also saw them push pause on the prediction market ETF filings and elicit public comment there. We've seen some other ETFs move a little bit slower than people expected. So, look, I do think it's the case that for the first 6 months or maybe 9 months, it was just breakneck, clear the backlog, and now we're in a more normalized process, right? I don't think this is abnormal. I think we were in an abnormal world in the Gensler era, and maybe an abnormal world for the first 9 months, and now we're in something that looks more like normal commission processes. Um, I don't think it's necessarily bad or good. I think it's more probably normal.
I think it's pretty bad right now that they withdrew the innovation exemption or paused it indefinitely for a couple of reasons. One is there is no innovation exemption that has ever been really used, right? So this would be the first one. There's been talk about this innovation exemption for a while. We haven't seen anything about it. There's no like innovation exemption you can apply for right now, right? This would have provided details about what the color of the innovation exemption, the contours would look like. So I wanted to see that just for the innovation exemption as an exemption, regardless of what it applies to, how it exists in the market. I wanted to see that they've paused it. Second, David, you mentioned how we should find a middle ground. I agree. I think the innovation exemption was the middle ground in a lot of ways. The strong version would have been a new rule or clarity on existing rules instead of couching it under an innovation exemption, which is the weakest form of regulatory guidance that the SEC can issue because they can change it at any time and they can amend it. And also, it doesn't really have the form of precedent. But the innovation exemption was, and it's time limited, right? So it's going to be 12 to 18 months. I think in order for the SEC to figure out how this is going to work, there's either one of two ways they can do it. They can either continue to do what they're doing, which is to base the market impact on what's happening overseas, which is a dangerous game because they don't really have great insight as to what's really happening on offshore venues, or they can allow it for a limited time onshore and really track it and regulate it. Unfortunately, they passed on that recently. Let's see if they pick it back up. I hope they do, because it's really important to establish a precedent for the SEC allowing for innovation exemptions to push the market forward.
Well, we're coming on time then, and I know we wanted to give a little debrief on the Clarity Act, and in the Clarity Act, they also have in Title V, they also scoped out a section for the SEC and CFTC to do I think it was like a mini innovation sandbox, is what they called it. Maybe, and that was interesting. So maybe clarity is is even more important in other ways because at least then it's written into law and then decided up by these three-letter institutions to then allow these smaller startups to be innovative and regulated on US soil. But I mean, that was just one of the takeaways. I don't know if we have any other thoughts on the Clarity Act. We haven't had an episode since it actually went through the Senate Banking Committee.
Well, there hasn't been much news, right? So just to recap for those who missed our last episode, right? On May 14th, the Senate Banking Committee passed the Clarity Act by, I believe, a 15-9 vote. All 13 Republicans voted for it, and 2 Democrats voted for it as well. So that's the first comprehensive crypto market structure bill ever to clear the Senate. Um, Now the Banking Committee version still needs to be merged with the Senate Ag Committee version. which I believe passed in January on a pretty close vote. Um, and then it needs to be merged with the overall Senate bill, and it needs 60 votes to get that. It then goes to the House for reconciliation, and then if it reconciles with the House, it can be passed and put on the president's desk. The legislative process is deliberately meant to be very difficult. Anyone that looks at how a bill becomes a law can see that our founders of the United States very much ensured that bad legislation and sometimes good legislation takes a while to get through. Um, I think the floor math is worth looking at. Assuming all 53 Senate Republicans hold, you need about 7 Democrats to clear what's called cloture. Now we already have 2, but they said the 2 Democrats said their support was conditional. And I think like the big 3 sticking points that remain are the ethics sticking point. There's the Van Hollen Amendment, which would, I believe, have barred senior government officials from holding crypto assets, which it failed 11-13, if I'm not mistaken. Um, and and that's largely driven by Democrats, aimed primarily at the Trump family's crypto holdings. Um, so that's one issue. The second is DeFi safe harbor language. Senator Warren and this, quote unquote, law enforcement caucus want tighter illicit finance provisions. The crypto industry, has been pushing back pretty hard on that. But in exchange, I think many in the industry want developer protections. Um, so this is so there's that dynamic, and then I think the third is, of course, the banking industry is still pushing for tighter stablecoin yield restrictions.
So I mean, the act already has the Bank Secrecy Act. It has the regulators innovation. It has digital asset intermediaries. We would consider them exchanges. SEC, CFTC, OFAC. It has lists all of these out as regulators and oversights and checks and balances. I like, for my ignorance, what else? What more can be done to appease Warren? Like, what other agency needs to step up, or what more rules does she want to see?
Warren has a philosophical objection across the board to the gamification and more financialization of the US economy and the global economy. So I don't think there's anything that's really going to appease her. I think she also recognizes that she's made enemies on the crypto side, um, or has invited enemies from the crypto side. And as a result, any progress on clarity will redound to the benefit of her very political opponents that she has adopted over the last couple of years. So I don't think there's much that's going to be able to appease her. As my hot take.
Yeah, that's definitely true. She's not looking to be appeased. She just wants to block it and kill it and destroy the crypto industry. That's her end game. So the question is not how do you get Elizabeth Warren, because you won't. The question is how you get those 7 Democrats to get it through cloture. I think it's going to come down to ethics. I think as I've said before, I think that's the end boss. I think the other things can be solved, and then it will just come down to whether the Democrats are willing to find a path on ethics that allows this to go through. And hopefully they do, right? What's the poly market at right now? About 60%. That feels slightly optimistic. I think it's a coin flip. But, I think it's just impossible to know how this will sort out. I think it has everything to do with politics and very little to do with policy. Um, and I'm hopeful that we get it. I do think if we don't get it, it will be a setback for the industry, and will take a couple months for the industry to digest that new reality.
Yeah, I also hope we get it. I think we will get it. I always say that every regulatory milestone in crypto has to come with drama, and I think this one's going to be no different. But we'll see. We're definitely in the political back and forth phase. We don't have a ton of time. The one thing that might be also important to highlight is that there are also a lot of other things that are being discussed in the Senate. It's not only crypto, and the window is very tight. So we're not also competing within all these internal interests. We're also competing with other issues from other topics that are also being discussed there. We'll see how it goes. I watched the full markup session, I would say, and I was impressed with. I don't know if you guys watched that too, and if you did, I wonder if you guys were also impressed with how congenial the conversation was between the, let's say, non-Elizabeth Warren Democrats and the Republicans. Of course, everybody's highlighting that there is issue to resolve. I think the main sticking points have been highlighted here, but it did feel like everybody's engaged and trying to find a way to move forward. The conversation was way more congenial than any political conversation that I've seen in the current times. The same thing happened, by the way, in the Senate Ag markup session in January, the one that Michael alluded to very briefly. That one passed strictly along partisan lines, but again, the conversation was congenial, was friendly, and I think this probably shows a little bit of incentives for us to get to something, especially on the ethics side, that everybody can claim victory around. I don't know how that will look like, but we'll see how that shapes out. The idea is, I think the next 2 to 3 months are going to be crucial, right? By early August, that's the latest date that everybody would like to see the bill at Trump's desk, which would probably mean that what I'm hearing from our head of policy, Kevin, and also from the specialized media, is that probably July is the time when this bill will go to the floor. So we'll have about a month here to clear a lot of these discussions, and we'll see how things shape out.
I think ethics is a pretty easy give, except the fact that it's the most political, right? So from a policy perspective, I don't really care that much about the ethics piece. I don't think most people do. But from a political perspective, especially if the president does not like that ethics provision, it's going to be very difficult to get around. So we'll see. But if that's the biggest sticking point, I'm fairly bullish on success. What I'm really looking at is whether or not the banks can make any more inroads on their quest to kill stablecoin yield and how that impacts legislation. That's my big concern. And just like we saw with the SEC rolling back or delaying its innovation exemption, these things can change on a dime. You know, if you were to ask me a month ago if we're getting the innovation exemption based on all the public comments that the SEC has made, I would say 100%. But you got to factor in the back rooms that are happening.
Yeah, I think all these these slowdowns and roadblocks from the first 9 months under this new administration is also because crypto's becoming more financially and politically important, and there's a lot more stakeholders. So these things are only natural in this case. It's exciting to see. I have no issues with ethics language either, and I have no issues even if the stablecoin yield language was made a little bit tougher. I will only have an issue if it doesn't pass. So that will be my only qualm. But yeah, we're coming up to time there. So everyone, thanks for joining as always. I think Michael wants to end us with a little note.
Yes, if you've been with us for this long, please like and subscribe. It really helps the algorithm and helps promote the pod.
So help
Good
spread the
stuff.
word.
Love it.
Love it.
All right, all. Thanks for joining. Thanks for listening. See you
you
next
guys.
week.
See you next week.